Holy flippity flip flop flapping smokes, everyone! The Federal Reserve and lenders are going bankrupt. We've just got some new shocking information, and people, I keep doing videos on the banks because things are getting completely crazy right now, and it seems like there's absolutely no hope left for the banks and these institutions because they are literally losing hundreds of millions and billions every single day. This is not me exaggerating. I've got the proof, the facts, and the data to back it up. This is definitely going to be a good one, everyone. So let's not waste any time. Let's get straight into the news, the facts, and the data. Look at this, everyone. The Fed is now paying $500 million to a handful of banks every day and suddenly has a very big problem. What, everyone? The Federal Reserve is paying $500 million in interest to banks every single day. And exactly how are they doing this? Well, it's been something I've been talking about on the channel for a while now. And that is, everyone, of course, the Federal Reserve reverse repo operations. And this is where banks park money at the Federal Reserve overnight and they get paid interest. Now we can see here, it all started in April 2021 and it's been climbing every single day. It first hit $1 trillion parked there every day around August 2021. Then it's been climbing ever since, and it hit 2 trillion around June 2022. And it just hit a record recently of almost $2.5 trillion on September 30th. So again, simply what this facility is, it's the banks parking money at the Federal Reserve to get cash for their money to earn interest when they buy the US Treasuries from the banks to get that collateral. But unfortunately, this facility is leading to record losses for the Federal Reserve. Look at this report. It's official, everyone. The Fed's in the red. The Federal Reserve is posting its first operating loss in years as interest rates soar and demand for US bond craters. Fed data show the central bank reporting earnings remittances due to the US Treasury of negative $2.9 billion as of October 5th. Well, everyone. I just did a video yesterday about how the Reserve Bank of Australia has recorded record losses with $37 trillion in negative equity, and the Reserve Bank of Australia being underwater. Well, now it's begun for the US Federal Reserve as well. And why this has big consequences for the US and the US government is because during 2020, 2021, the Federal Reserve created huge amounts of profits. They had record profits, and they were able to send those excess profits after they paid all their operation costs to the US Treasury. Well, the US Treasury isn't going to be getting any money, and they're not going to be getting any money for a long time, right when the US government debt is at all-time highs. Look at this clock, everyone. Well, everyone, look at this. This is the US national debt, $31 trillion and counting. And it seems like every month it goes up by another trillion. Look at this, debt per taxpayer, $247,000. You taxpayers have to pay for this debt. And look at this debt to GDP. We can see here in year 2000, it was only 56%, but now it's 125% debt to GDP. People, this, and with a few other things I'm about to go over in a moment, is a recipe for disaster. And with interest rates about to skyrocket, guess what? That means the Federal Reserve's losses are going to get bigger because bond prices are going to have to crash. They're going to have to pay more interest to banks overnight using this reverse repo facility. And every 1% increase in interest rates, that's an extra $300 billion the US government has to pay in interest costs. And with the latest inflation data coming in hot, that means interest rates, like I've been warning about, are going to hit 5%. Remember at the start of the year, the Fed will say, look, we're just going to lift interest rates, but maybe they'll go to 1%. Then they said 2%, 3%, 4%. And now it's looking like they're admitting that it is going to hit 5%. And this is well trying to warn many people about, but they're saying there's no way the Federal Reserve will lift interest rates. The whole system will collapse if they lift interest rates above 2%. Well, it's happening, everyone. The Federal Reserve has no choice. Otherwise, this inflation is going to turn into hyperinflation. And once hyperinflation begins, there's no stopping it. At least if they lift interest rates too high, they can always drop them again. But like I keep saying, once the inflation genie's out of the bottle, there's no going back. But wait, there's more. Look at this. Total US debt is approaching $100 trillion here, $92 trillion. And as we see around here, credit card debt over $1 trillion now, $1.1 trillion. We're about to pay a huge price for this debt binge we've been on for the past 2 decades. We've been in a downward interest rate cycle for the past 30 years, but now we're going to go on a prolonged interest rate hike cycle. It's not going to have any cuts in 2023, 2024, everyone. Because look at this, core US inflation rises to 40-year high, securing big Fed rate hike. Prices excluding food and energy increased 6.6% from a year ago, and that's the highest since 1981. Shelter, food, and medical care costs contribute the most to the broad rise. And people, what do they all have in common? Shelter, food, and medical care costs. Well, they're all essentials we all need. And this is absolutely destroying the middle class. Some say by design. The middle class and the poor are losing everything, while the elites, well, maybe, own everything. But again, back to this report with the Federal Reserve losing record amounts. Look at everyone. This is a chart of earnings remittances due to the US Treasury on Wednesday. We can see here they've been making billions, peaking at 3 to 4 billion. But look at this line here. It has absolutely collapsed. This is record losses for the US Federal Reserve. It highlights a dramatic shift in the economic environment and could make for uncomfortable optics at a time when the Fed is already under pressure to bring down inflation. The central bank has ramped up its fight against high prices, paying added interest on bank reserves and through programs like its reverse repurchase agreement facility, better known as the RPP, as it attempts to dampen demand. And it's all but guaranteed the Federal Reserve is going to lift interest rates by 0.75% at the next meeting next month. And really they should go 1% because what is insanity, everyone? Doing the same thing over and over again and expecting a different result. While the Federal Reserve has been doing these weak rate hikes again and again and again, and they're trying to get the result of lower inflation, but it's not happening. The move to an operating loss is notable because it so rarely happens. In the years since the global financial crisis, the US central bank earned more than $1 trillion in interest income that it remitted to the US Treasury. Wow, everyone, that's not a bad payday. $1 trillion since the financial crisis. But what do you think has happened to the American people? Do you think they've shared in this abundance of wealth? No, I think their standard of living has absolutely crumbled. And it's about to get much, much worse because the US government isn't going to be able to afford to keep paying out these stimulus checks, these social programs. Eventually, these social programs are going to run out of money, like how the pensions funds in the UK nearly went bust. But I'm sure what you're wanting to know is, well, okay, you said there was lenders going bankrupt. Where is the proof? Where is the data? Well, people, it's worse than even I imagined. Look at this, everyone. US mortgage lenders are starting to go bankrupt. How this one factor could be triggering the worst surge of failures since 2008. Wow, everyone. It is literally happening right before our eyes. We are watching a slow motion train wreck and a crash is inevitable. I don't know what else I can do to convince people that we are already in the middle of a financial crisis, but many people are still blinded, watching the football on the television, keeping up with the Kardashians. They're completely blinded to how bad of a situation we're in. Says here, the real estate market just can't catch a break, with inventory of resale homes remaining low and raising rates, making it harder for buyers to justify making the leap. And now we can add mortgage lender bankruptcies and the rise and fall of non-qualified mortgages to the factors aggravating in an already uncertain market. So that's exactly right, everyone. We've seen mass layoffs in the mortgage markets. We've seen mass layoffs with brokers because people simply aren't refinancing on these crazy high interest rates. And now that the housing market is starting to fall, it is happening, everyone. We're seeing less and less demand of home sales. But with the First Guarantee Mortgage Corp and Sprout Mortgage, a pair of firms that specialize in non-traditional loans not eligible for government backing, recently running around, real estate experts are beginning to question their value. First Guarantee filed for bankruptcy protection, while Sprout Mortgage simply shut down earlier this summer. Documents tied to its bankruptcy filing, First Guarantee lenders said once interest rates started to climb, lending volume dropped and left the company with more than $473 million owed to creditors. Wow, everyone. $473 million owed to creditors. And if you think these are the only two companies that are going to go down, no, we're going to see contagion. We're going to see a ripple effect through the financial markets, and we're going to see more failing. Meanwhile, Sprout Mortgage, which leaned heavily on non-qualified mortgages, abruptly shut down in July. So we're seeing some mortgages just shut shop and walk away altogether. Still, many non-qualified mortgage lenders will be challenged when loan values start falling, as many are now with the Federal Reserve's moves to raise interest rates. When values drop, non-bank lenders don't always have access to emergency financing or diversified assets they can tap like large banking lenders. Banks can also lean on safe qualified loans because they factor in traditional income verification, more stringent debt ratios, and don't carry features like interest-only payments. Translation, as interest rates go up, this is going to be more and more pain for these mortgage lenders. But you want to know what this really means and what I'm seeing? What I'm seeing is what I like to call a devil's cocktail. We're seeing savings collapse, debt skyrocket, and we're about to head into a depression. Because like I've been showing you people, this is US personal savings rate. It hit a peak in April 2020 when everyone got their stimmy checks of 33%. But look at this, it just keeps falling lower and lower and it's hit a low of 3%. And now we've just got another fresh dire warning. International Monetary Fund warns worse is yet to come as steps to slow inflation raise risks. And this is definitely going to affect the banks heavily. 1/3 of the global economy may tip into contraction next year. They're already in contraction. Caution comes as lenders gather in Washington for IMF meetings. What we're seeing right now is we're seeing emergency meeting after emergency meeting. We're seeing treasuries of major governments come together to have these emergency meetings. We're seeing treasuries of governments, central banks, big, large hedge funds, institutions like the BlackRocks, like the JP Morgans. They're all coming together in these big meetings now because they are in a panic. They know the system was failing and they're trying to scramble to figure out a way to save it. The impact of the Federal Reserve's monetary policy tightening will be felt globally, with the dollar's strength versus currencies in emerging and developing markets adding to inflation and debt pressures. And that's exactly right, everyone. What I've been warning about is a foreign debt crisis. As the Federal Reserve raises interest rates, and if other central banks, like for example the Reserve Bank of Australia, doesn't keep up, their currencies are going to crash. Like we're seeing with the euro, like we're seeing with the pound. And look at this chart here of the Australian dollar. Look at this. Just in April, it was 76 cents for the dollar and has now plummeted all the way down to 63 cents. I've warned, if you're watching this in Australia, Europe, UK, etc., even if central banks are telling you, don't worry, we're not going to lift interest rates to 4 or 5%, they're lying, everybody. They're going to have to follow the Federal Reserve, otherwise their currencies are going to keep crashing, and then that means imports become much more expensive and inflation gets worse. Excluding the unprecedented slowdown of 2020, next year's performance would be the weakest since 2009 in the wake of the global financial crisis. So we're starting to see the similarities here, everyone. We're seeing record losses by central banks. We're seeing failures by lenders like 2008, and now we're going to have the weakest growth since 2009, the global financial crisis. But they're trying to tell us we're not in a recession though. Doesn't make sense to me. And for those that thought it was bad now, well, the IMF is saying the worst is yet to come. The worst is yet to come, and for many people, 2023 will feel like a recession or a depression. As storm clouds gather, policymakers need to keep a steady hand. So everyone, I know what you're thinking. Well, okay, what does all this data, all this economic jargon mean for you in simple terms? What this means is, everyone, central banks are going bust. They're running out of cash. Yes, they can keep printing money like crazy in normal times, but because we're having record inflation, they can't print crazy amounts of money like they could before. We're going to see more lenders fail, and we may even see some banks fail during this financial crisis. Inflation is going to get worse, and if you think interest rates are high now, they're going to go higher. And unlike the central banks are saying, they're not going to go lower for years. So everyone, that was just another important update. I can't keep up with all the news that is happening right now. It is getting crazy out there. What do you think? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.